Alright friends, in continuation to where we had left, let's look at a few bullish reversal chart patterns. So if you are able to see my screen, the first pattern that we'll be discussing is the rounding top pattern. In a rounding top pattern, the basic rules are opposite to the rounding bottom pattern, which means that your stock is in a visible uptrend with your EMAs providing or acting as a support. And once the pattern is nearing completion, your EMAs start acting as a resistance and your shorter period EMAs start converging with your longer period EMAs. And as we had spoken earlier, we can also make use of various oscillator tools like RSI and MACD to further validate our observation. So as you can see here, I have the chart of Ajanta Pharma, which is in a visible uptrend with the price making a higher top, higher bottom, higher top, higher bottom formation. But if you carefully notice, the EMAs have started converging and acting as a resistance here. The shorter period EMAs are converging with your longer period EMAs. And you can also notice that we have a visible negative divergence in the RSI and your MACD is giving you a bearish crossover and started to go into the negative territory. So when you spot this kind of a formation on a higher time frame chart like a weekly chart, you can switch on to a lower time frame chart like a daily chart and you can start taking your positions accordingly. Now, given that this is not a futures and an option stock, you will not be able to short sell this particular security. So if you are holding a long position, this is the right time where you should book out your position and you can take a re-entry when the stock is showing a sign of bearish reversal. So always remember that when we are looking at technical analysis, it is not just for the purpose of trading. Even in investing decisions, like if you have invested in this stock at a very low price, you will be able to time your exit and time your profit booking. And until the trend is reversing, you will be able to be a part of that trend. Remember, trend is like a moving train. Unless you have an option to jump off that moving train and jump into another new train, you should not exit that moving train. And always remember, when you are deboarding a train, it is always safe when the speed is limited or the speed is the minimum. When the speed is high, it is not advisable that you move out of a running journey. Similarly, if you notice here, the price movements are quite wide here, but in the consolidation zone where the pattern is almost nearing completion and the EMAs have started acting as a resistance, your price movement is also very narrow, which means that the speed has also come down. So this is the right time where you can deboard this particular journey and you can look for another better journey. And if you are not able to find a better stock to put in your money, you should sit on cash. Sitting on cash, timely booking on profits is very, very important to be successful in the stock markets. Moving on, a slight variation of the rounding top pattern is your inverted cup and handle pattern. So I have taken the chart of Lupin Limited again on a weekly time frame here, and as you can see here, I have drawn a cup and a handle. The stock is in a visible uptrend with the EMAs acting as a support, and upon the completion of the pattern, the EMAs have started converging and acting as a resistance. And if you look at your oscillator tools like your RSI or MACD, the RSI is giving you a visible negative divergence, which means that the momentum of the up move is losing its charm and the momentum of down move is picking up. And second, your MACD is also giving you a bearish crossover and started to go into the negative territory. So these are all the various indications which will help you attest your belief, and you can switch on to a lower time frame chart to define your entry and exit. And finally, the head and shoulder pattern, which is also a bullish reversal pattern. So if you can see, the rules are almost the same. The stock should be in a visible uptrend with the EMAs acting as a support, and upon the completion of the pattern, the EMAs converge and start acting as a resistance. And your oscillators like RSI or MACD will also give you a similar indication or view. In this example on my screen, I have made it slightly more interesting. If you are able to see, I have plotted a dotted line on the RSI which is indicating that whenever the RSI touches a level of 75 to 80, it comes back down and cools down. And this has happened historically over a long period of time. And upon the completion of this pattern, which I am able to spot here, I have a similar observation, which means if history has to repeat itself, one of the premises of technical analysis, then there is a good chance that when the RSI is touching this level, which is not able to sustain, the RSI needs to cool down, and for the RSI to cool down, the sellers have to start overpowering the buyers. And a similar observation has been plotted on the MACD side as well. The MACD has never sustained above this level, which is marked with the dotted line, and if history has to repeat itself, the same thing is expected to happen. The probability is quite high. So, as we can see, the pattern got complete, the EMA started acting as a resistance and started converging, and your RSI and MACD also gave you signs of mean reversion. Mean reversion implying that it is reversing out from one defined level which it has never been able to cross and sustain above on a historical basis. We'll cover this topic in further details in the subsequent videos, but for now, this should be your understanding that you should also look at the levels where the RSI or the MACD has historically peaked out. These kind of observations will always give you an edge in your trading and investing journey. So folks, I hope that you found this session informative and you are now able to make more sense out of what bullish reversal patterns look like. Always remember, if you are able to apply those rules and techniques that we have covered here, like the EMAs, the oscillators, the reversion from the peak out levels in the oscillators, these simple tools and techniques will help you take better and more informed trading decisions. The caveat being, patterns can fail because patterns and technical analysis is not an absolute science, which means the more you practice, the more you follow the rules, and the more you act on discipline rather than intuition is what will give you more success and reward in your journey in the stock markets. I'll look forward to discussing more of these patterns and the continuation patterns in the subsequent videos. So stay tuned and keep watching the next video.